ONL had earnings a few days ago. Let's go over the reaction from the stock price. Let's talk a bit about the assets versus the market cap and use some common sense here and talk a bit about what's keeping stock price down in this case. First of all, the month that's been, stock is up by a lot since the dividend cut. On the earnings date, nothing happened, nothing special. It basically traded sideways, down a bit, recovered, and then it has increased a bit since, but this is not important. What's important is that we have a company with a market capitalization of 120 million. Let's talk a bit about what you get for those money. To be able to do that, we have to look at the balance sheet and we have to look at the income statement as well in this case. In the balance sheet, we can see that this is in thousands of dollars. We can see assets, and in total here we get 1.3 billion in assets. We see land and we see buildings and fixtures and improvements. So we see land here, 200 millions, and then buildings, fixtures and improvements, about 1 billion on the balance sheet in this case. Remember, 120 million in market cap. So the land alone is worth more. Of course, we can't just look at that. We have to look at how this is financed as well. And in this case, we see liabilities here, 573 million. So they have mortgages, 370, a credit facility, and some other minor posts, all adding up to 570 million. And that means that equity here, attributable to shareholders of ONL, is about 750 million in this case. So this is attributable to common stockholder, total stockholder equity in this case. Remember, $120 million in market cap. Very, very interesting. There must be something seriously wrong with this company. Why is it priced like this? Remember, 120 million. Well, if we look down a bit, we can see that if you just glance at it, you see that there's a basic and diluted net loss per share attributable to common stockholders here of a loss of 17 cents a share. But there's some accounting tricks going on here. Where is this loss coming from? Let's explore it together. Rental income, in this case, this is also in thousands of dollars, by the way, the income statement that you see on screen. So rental income, 37 million in this case. Remember, valued at 120 million. So total revenue here of 38 million. And then we have a cost of operating these properties, about 16 million, some general and administrative, 4 million, adding up to about 21 million in this case. And then we have a very large expense of depreciation and amortization. So paying off loans, writing down the value of the buildings. This could be a number of things. We have to look at the cash flow statement to be more certain in this case. Paying off affects cash flow because cash leaving the company, but depreciation does not affect cash flow, and it's not actually money leaving the company. That's why we look at normalized funds from operations. We look at the FFO matrix in the case of REITs. And then impairments, also not a real cash out type of transactions. But all these expenses add together to 39 million, so already 1 million in loss here. But as we can see, a big part of that was attributable to depreciation and amortization. We also have to look at expenses here from interest rate, quite important, 8 million. Put that in relation to what the company is earning. Is it common sense? Is it reasonable? Only you as a potential investor can decide that for yourself. we can take a look at this, and we know that when debt is refinanced now, the interest goes up, and that's one of the reasons why the company has chosen to cut its dividend. It's what caused stock price to drop massively this year, the dividend cut. But that's the cheapest capital that they can find to pay off the debt and not having to refinance at higher rates. It has to be said that the debt level is extremely low for a property company. Leverage is very, very low in the case of ONL. But now we know where the loss is coming from, and if we scroll down we can see the FFO matrix here. FFO attributable to common shareholders in this case. So per diluted share we can see 16 cents indeed. So the business is cash flowing basically. They're paying out 2 cents of this in dividend, conserving a lot of cash on the balance sheet. We can see the amount of cash that they have if we scroll up a bit and take a look at the balance sheet. Once again, we have cash and cash equivalents of 9.3 million. 9.3 million in cash. Valuation was 120 million. So a very interesting company. Do I think that this stock will just shoot up massively and this trend here continue that we've seen the latest month, up 35%? As you can see, if you're in the Discord, I took a screenshot buying for about $4,000 in this company recently, bought for $200 more, but the pricing was just too mismatched in my opinion, because this stock price has been heavily punished. This is a spin-off from O. All of a sudden, as an O shareholder, you see you have a bunch of ONL in your portfolio out of nowhere. What do? Well, most people tend to sell it, and spin-offs tend to underperform quite a lot just after the spin-off. And then this is the office part of O, a class that many investors think might disappear. This is the risk we have to be aware of. Perhaps we will not work from an office in the future, but as a commuting 9-to-5 employee who just got back from the office, I got a strong suspicion that the office is not going anywhere. I don't think that middle managers will relinquish that control, and we see a lot of return to office. And I think also one of the reasons that the stock price has gone up a lot in the latest month is that we've seen some big real estate deals with regards to leases being renewed in the office space. And just driving around Dublin, for example, I can see fewer to let signs in office buildings now than in the middle of the crisis. This was also reflected in the numbers. It seemed to have slowed down. Vacancy still quite high, 74% something of the office space is rented out. That's the same as last quarter roughly, but management communicated that alright, we got a strong pipeline for renewals. In fact, if we scroll up a bit to the top of this, we can see some of those renewals early on here. Location Buffalo, New York, new lease 160 square feet for 10 years, and then some renewals of course as well for smaller square feet spaces, but we can see that deals are indeed happening in the market. So is this the bottom? We need to see the number of leased space going up. We gotta see the 74% number go up. We gotta see less vacancy, and I don't think that we will see a lot of action from this stock in the year to come. I think that the big bullish trigger will be, in this case, interest rates going down or dividend going up. Because when investors look at an asset like ONL, this is not a growth stock. You're not going to see Porch Group type of returns. This is more conservative. Some look at it like an equity bond. And right now you get good interest rates on, for example, government debt. You can buy American Treasury bonds, for example, or bonds in companies, stuff like this. It's classified as a bit safer than equity in this case. But when interest rate goes down, you get less safe returns from the bonds, and then these type of investments like ONL, REITs, they look way more attractive. We can take a look at the current yield here. Google says 3.74%. This one was out of whack before, so I did the calculation, dividing 2 cents a quarter, that's 8 cents a year, divided by share price. Yes, indeed, this number holds true. However, remember, this was a big dividend cut. It used to be 10 cents a share before. Funds from operations, 16 cents for the quarter, paying out an extremely small amount. There's a lot of cash there that can be paid to shareholders. So when we weather this storm eventually, then there is potential for large dividends. And also share price increases. But for the case of REITs, don't expect massive gains. Every time dividend is paid out, the stock price tends to fall with the same amount. So that's something to keep in mind if you're doing research on the stock here of Orion Properties in the future, and you find this video and you see that, alright, it has performed decent since then, but not up a lot. Well, remember, dividend as well, 2 cents now, could potentially be higher every quarter going into the future given the cash flow of the company, but only the future will tell. In terms of common sense, market cap 120 million, and looking at the assets that are attributable to shareholders, I think that the valuation is out of whack, and I think that the market is just looking at the risk of offices going to disappear and just putting too much emphasis on that. I think it's overplayed, and I think that the market is too fearful on stocks like this. So right now I have 1,000 shares of ONL in the growth portfolio that I shared recently on a video. You can check that out to see what's in the main portfolio. And 4,000 shares, something of this, in the dividend portfolio, where I try to take a portfolio as quickly as possible from $0 to $100,000, just to see how quickly I can do it if I had to do it all over again, basically. So total position in ONL right now of roughly 5,000 shares. And with the current prices, I will continue to increase on this one. And I think that in my current situation, it's alright, It's not going to be another Porch Group, as I stated before. This makes sense for me because where I'm at right now, I have enough money to retire, and I don't need to take large risks like I did when I was younger. I can invest my money into still risky assets, but also assets that will pay me dividend, that I can use when I travel, that I can use to pay rent once every third month or something, buy something exciting, just practicing spending more money. So I want to reiterate that for the younger people watching the video. I don't think that this is necessarily the best investment to get rich quickly. This is just something that fits in my situation right now. Anyways, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.